Hello, guys. Hi, everyone. Thank you for attending today's presentation. It's been a long time I've presented. I had the rest of the team has been presenting, but they all requested I present this material. So today I'm going to talk about the art of position sizing. This is a very complex, it seems easy, but it is a very complex in execution. And I'm not really a great artist, so so bear with my graphs. They're not as artistic, but it'll get the point across. So it's more about the understanding how even a small account can make a difference. And I have extremely real world data baked into what I'm going to show later in today's presentation. So welcome. And as I usually, when I present for the group, I like to always present a presentation with the Dilbert slides. And there's Dilbert on trading, which is supposedly super accurate. And this was in 2015, if you guys can enjoy the joke. So, okay. You know, I've actually seen a lot of people becoming stock traders for the first time, which is a good thing. The market's going up, but that happens all the time, which is good. And please never max out your credit cards to be a day trader. Don't ever do that. And Richard, everyone can hear me, right?
Yep, I believe so. Loud and clear.
All right, awesome. Okay. All right, so this is from the blog of Trader Lion, Richard's company. Well, he works for them. They had a great quote by Gary Vaynerchuk. So this is true. For this presentation, having your spreadsheet is what, you know, you have to do the work. And this is a great quote. So I just took it off their website. Thank you, Richard, for your website for that. All right. All right, so this is a disclaimer. Me, Richard, Ryan, Sanjay, Bob, none of us are financial, you know, advisors. This whole presentation is for education purposes. You cannot blame us for anything. This is IBD Meetup. So this is all legalese. You agreed to it. Yep, entertainment, educational purposes. Okay. So today's topic, there are 2 chapters that I highly, it's mandatory to read. You have to reread, understand them because that is the core of this presentation, is these 2 chapters. And you can see where I'm about to lead is Mark Minervini's books, because I have his logo there. The 2 chapters in and out, you have to have both the books. And these are the 2 chapters from both the books. You can't just read one book and it's not. It's actually, as he, you know, he's told me these books are in a volume format. So both these chapters on the first book is chapter 12 and 13, and then section 8 on his second book. They go hand in hand. So you have to go in and out. If you have to read 10 times, read it, study it. Everything is in these 2 chapters. Now, I've synthesized the material as easy as I can to present, but it is the most game-changing performance. It actually, I can attest to this. What I did last year took me a year to achieve for the USIC. I did that in about 5 months this year. So just by understanding the material in these chapters. Okay. All right, so let's talk about some position sizing guidelines. So the first part is, let me move the mouse here. Okay, can you guys see the mouse cursor on the screen?
Yeah, we can. Okay,
so this one took me a while to understand this. It may seem simple, but I originally started with the CAN Slim model. I was doing, I always initially did, my risk was about 8% in the entire account. So that would be my threshold limit. So I was trading that for years, and which is not that much because I would recover it really fast. But looking back, in studying all my trades. I was like, well, that's way too much risk, because once your account is big enough, you cannot take that type of risk, because there is a risk of ruin in that. So this, the first point is very important, is the entire account. The maximum risk is between 1.25 to 2.50. Now, in this example, I use a 10K account. Yeah, you may think, oh, it's only $125 or $250, dollars maximum. But believe it or not, these numbers are very critical. Even if it's a small account, small amount that doesn't bother you, that's fine. But this small managing risk at this level can really do some amazing results. Then the second is the maximum 8 to 10% maximum stop per trade. Let's say there's a gap down, something happens, maximum 8%. That's with O'Neill. On average, even William O'Neill and Mark, all of us get out by like 5. I moved from 8 to 5 about like years ago. Now my average loss is even less than 5%. I'm actually at 2.8%, but that's with experience. But if you're new to trading, 8 should be your hard stop. But this is based on your proper buy point. You can't just arbitrarily choose 8%. It has to be in sync with the proper breakout entry. But in essence, it should be around 5 or 6%. Because something's going wrong if you buy something, And then never take any position size larger than 50%. So let's say you have a $10,000 account, you reduce it, maximum position on 2 trades, 5,000 each. That's maximum, no more than that. I've done past that many times, but moving forward, that's not the right approach. Because what happens is your risk of ruin goes up, especially if you're doing, for example, some Chinese stocks. Last year, we had that, what is it, Linked Coffee, LK. Now, originally, I made 30% on that stock, got out within 2 weeks, and then a few months later, another setup was coming. I had a large position. It was about 75% of the account, but it wasn't moving. And I was like, okay, let's get out. This is in the competition time. And a week later, that stock collapsed. So that was a wake up call. And then I was speaking to Matt Caruso about it. Like, oh, you got to watch out for some of these stocks, especially tiny stocks when you're using size. So I made some mistakes. I mean, I'm a trader too. I make mistakes. And then I learned a lesson on my self-analysis, never have position larger than 50%, because your risk of ruin can be greater, especially if you're using margin, then the risk is off the rails. So, and I'm going to explain about this. And I have examples about the 50%. But then we move into optimal position size. So optimal position size maximum should be about 25% of your entire trading account. So you can have 4 positions of optimal size of 25% each. So on a 10K account, it would be 2.5K per position. So that's 4 trades. And you can have 4 different stocks, for example. That actually is mathematically, it's very optimal. And that's pushing it. Now, let's say you have multiple stocks you want to buy. I know this is a little bit more aggressive trading on swing size, but over diversification goes against your portfolio performance. So for me, I do great when I do 4 to 5 positions. I do phenomenal. I can concentrate, I can focus on what's going on, and I can pick up winners. Now, there are many times I have 4 stocks moving all at once. And that feels great. And then if let's say if 4 stocks are moving or 2 stocks are moving and 2 are not, I unload the 2 stocks and manage my risk even better. But now last year, if you guys look at the performance of my trading competition, you can look at that April and May, my performance dropped. There's slight performance drop. The reason why I ended up having 10 positions. And they were mismanaged on size, and I had to immediately figure out the mistake was there's so many stocks are moving. I ended up buying 10. The best stock was the size wasn't optimal in that. So that's when I learned immediately. I learned the lesson. All my trades have to be maximum 4 positions. Originally, I've done 4 positions, down to 3 positions, down to 2 positions, down to 1 very concentrated position, provided everything is moving well. Now, I don't recommend that anyone do that. It's not worth it. Yeah, the gains are good, but your risk has to be really small. But stick to the guidelines here. This alone can transform your account. The other 2 points are mental capital. Having 4 positions can keep your head cool, or 4 or 5 or even 8 positions if you want. I'll explain how you get 8 positions. But you got to maintain your one. You need to control your FOMO, fear of missing out. Look, stocks go up, get to the next trade. So proper positioning. If you're chasing a trade, wrong position sizing can be devastating. And I have examples on that too. And while placing stops and managing risk, you have to respect your stops. Always have a game plan where the stops are, and they need to be in the right location. Okay. So, and it has to be in the right location in respect to where you're buying them. And then buying has to be done right. Because this is where you manage your risk to reward, is where you're buying and where your stop is. And any questions so far?
I'm not seeing anything just yet. There's a question about whether the slides will be emailed to us and be available.
Yeah, sure. I'll get the slides out. Yeah, no problem on that.
Cool. I think that's it so far.
Okay. All right. Richard, you want to add anything to this?
Nothing other than just, yeah, stop losses are absolutely vital to make sure you're managing your risk properly. I mean, I think you summed it up really, really well.
All right, let's go. Okay, so there are some spreadsheets. Let me go back. I was on, so some of the position size spreadsheets, expectancy spreadsheets are actually in Chris Peruna's website. And I discovered this webpage and has stopped by watching Richard's video on YouTube. So it's a really good spreadsheets. I use Mark's platform, private access to put all my trades in. It has data analytics in there. I use all my data. I've done enough trades that I know my numbers pretty much by heart now. But if you need the spreadsheets, you can take a look at this. It's really good. It's there. If not, you can use the formulas in Mark's books. Everything is laid out in his books. You just got to put them in a spreadsheet, and that's it. But I want to thank Richard for having this interview. It's a great interview, and then the resources are right there. So that was really good. And okay, all right. So let's talk about this. Now, let's say I'm purposely using a small account. There is a reason. If you're new to trading, it's better to have a small account. Because sometimes I have a friend of mine, he was starting off with a very large amount as getting into trading, and he couldn't sleep at night. I told him that's past your comfort pillow factor. You have to sleep well at night, and everyone's different. But when it comes to short-term trading and swing trading, getting your style right, it's highly recommended to do a smaller account. It's never going to be a situation where it's going to work things right off the bat. Yeah, last year people got, things moved. You bought Zoom, you bought Tesla, things moved, but that absolutely didn't happen this January. To be honest, I was aware of that. Markets do turn to change, and you have to be flexible. And you could have a position size that is very uncomfortable for you, and that creates more stress, more nervous action, and all kinds of other things that follow up will cause other problems. So managing size is critical. It's as critical as respecting your stops. So let's say you have an account of 10K. Maximum 4 positions would be of 25% size of 2,500. So those could be 4 different stocks. You could have Apple, Zoom, Tesla, Cliff Resources, like the steel stocks, anything. That's maximum. Now, when you're starting off, you could go with that approach, but you have to manage your risk. Let's say you're buying a 25% position size. and your maximum risk would be 1.25. Now but you got to know where your stop is. But I'll explain that on the next slide. Now, let's say you reduce the half of the original size down to 1/8 of the account. So now you actually have 8 positions you can create. When you're testing out the market, you can go out with that. Like, let me try the first trade. If it moves, you increase your size, and I have a full spreadsheet on this. And if you want to go even more conservative, you want to really feel the market, you can go 1/16 of the original of this block. So you're splitting this trade into, like, more small trades. Now, you may think 625 doesn't go a mile. It does. It actually does. Because your maximum risk is really, you have to go inverse, go from small to big, not the other way. If you're new to trading, if you're starting off, let's say tomorrow for the first time, you should not fork out 25% size on the fly. So, okay. So as I was saying, maximum risk of total equity in your total account should be negative 1.25. Up to 250, you can do 2%, 50 cents, 2.50. So that would range between $125 to $250. Now, if you use 25% size with a 5% stop, it still equates to 125. So that's one trade with a 5% stop. You can actually hit your risk to total equity right off the bat, provided you have no cushion in your account. Now, let's say you do it at a 1/8 of an account at 1250. Now, 10% stop. I don't keep 10% stop, that's too wide. But let's say with a 5% stop, you would have a $62 exit. If you want to be more like conservative and you want to explore, let's say you want to have some feelers in the market, you would do it at 1/16 of the account of this one block. Now, I'm not saying do 20%, but with the 5% stop, you would get a $31 to $25. That's your exit. But you can do a lot of trades like that, and your account is still intact until you get some traction in your account. So, any questions so far? Because I'm about to go into spreadsheets, and let me see, Richard. There's some questions there.
Yep, there's some good questions. The first is from Jackie. How do you scale to 25% when your risk is 1.5% per trade? Do you scale it in?
Yes, I'm actually going to show that in a spreadsheet where that's how I scale it in. That is coming up. Wait till the spreadsheet show up. That's actually, I'm going to show. Yep, progressive exposure is going to show up. Choppy markets, what position size do you test the market? So in a choppy markets, I would be testing between 1/8 of that block size to 1/16. If I'm getting, and I have a pretty realistic example of my own trades I'm about to show in the spreadsheets, where I'm testing the market with literally with 1/16, and still, I will show some results on that. So hang in there, hang tight. Okay. All right. So we go to Paul Tudor Jones' quote here. My biggest losses always come after I've had a great period and I started to think that I know something. We are going to come back to this quote when I show the spreadsheets. This is so super accurate. I'm sure you guys have heard about this quote. He's a genius for this. He's a true legend. But this is very true to what I'm about to show, what this statement, I have full examples on this statement. Okay, before I go to the spreadsheet, let me talk about some examples of some charts here where I was doing position sizing, because I know people like to see stock charts. So let me show you some examples of the trades that I did. They give you some clues on how I'm managing risk here. So I did this. I've traded Cliff so many times this year. I've lost count. I've traded a few times. On June 8th, it was coming down to its 50-day. And this was an advanced trade. I was looking at how the reaction was here, how the volume was low here, and I was able to buy a position right there. Entry was 5%, but entry was at the 50-day daily moving average balance with an exit of below the moving average, around 1 to 2 was my stop. below the 50. So it had to move the minute I buy. And if the next day there was heavy volume or it didn't move, I would have been out of it. That was my game plan. Because I'm keeping my losses really tight on this trade. And this trade on intraday, literally 2 days later, went to 21.80%. And I actually sold it near the intraday. Now, yeah, the rules of IBD says you can hold it, but I don't do that anymore. If I'm having a gain, I'm keeping those gains, especially in a market where a lot of things are reversing. I don't know what the bar the next day is going to be, but if I have a 20% in 2 days, I'm taking that as a win. And you can see this was actually a cheat area, Mark style of trading, VCP style of trading. Because the volume was low, you could actually just buy it on the intraday, even the move up prior to it. Because my average gain for this year is between 7 to 10%. So it's past that range. My goal now is to preserve the capital and preserve the gains. Look at the next trade. Okay. So this is Coinbase. I didn't do Coinbase well this year on this trades, but I did get this trade. This is more like a play on Bitcoin. It was an ultra aggressive stop with exact 3% stop. Breakout was right around this pivot area at 230.52, and it got filled. By the time I was putting the order in at a market order, it got filled. It had a bad fill, which is good because there was a lot of volume coming in, and I got it at 230. The volume was just I could see the spreads were widening. The volume was just coming in really fast. Okay. All right. So now this trade was sold the next day. I didn't care if it goes up because it's within my range of 7 to 10% of my average gains for this year. Because knowing your batting average is critical. If you don't know your batting average, your numbers are going to be all over the map. Okay. There's a question here. Did I buy CLF using resting limit order? I actually did I had a limit order placed in, stop limit order placed in, because I was, with my time horizon, I'm not looking at the screen all the day, but I did have a limit order placed in. Okay, so let's go to this trade. This is a very interesting trade. HZNP on 15th of April. The breakout area was around 94. And I had a full 3% stop plan. So if it didn't work, I would be out. What happened is, this is the market nature. It goes up, breaks out, you're buying it, and then end of the day, it comes down. It actually just closed right below the 94 area. So this is what I didn't like. And I was like very iffy about this. I was like, I'm already iffy. Now, because I had a feeling the next day something's going to happen. And exactly the next day, gaps down and closes up really quick. This was done in, I would say, the first 10 minutes of the day, came down and went back up. And I was like, all right, it's closing strong, super fast shakeout. And I kept that trade because it was between 9:30 to 10 a.m. I was able to keep that trade. Now, what happened the following day, it turned, and I was like, it's within my range of losses. Average losses are about 3%, so it's at negative 2.97. I was out. This is how I was managing risk, because it can go up, and it does go up, because it actually does. Where was it? Yeah, it does go up, but it didn't matter to me because I was out. But in fact, eventually the stock did form a very good VCP pattern afterwards, and it took off. So sometimes stocks do recover and repair. So doesn't mean it's off your watch list, because a few months later, the stock recovered and repaired. And let me go. All right, is that okay? Okay, let's talk about, Richard, any more questions there? I'm not able to see.
Yeah, we've got some questions coming in. So first of all, Did you buy a CLF using a resting limit order on the 50-day? Did you already answer that one?
Yeah, I answered that
Yeah.
one.
Okay, let's see. One problem I frequently have is you buy a breakout and then the stock reverses, causing you to get shaken out using your stop loss, and then it recovers in the next hour and goes up. How do you handle this type of occurrence?
So it depends. Now, if I have profit in the account, I have cushion, I would sell half. Sometimes I sell half the trade. And then give it a few more minutes to see how it moves. If it's around my 3% range, for me, that's what I do. Now, if I sell half and it's just hanging in there, I'll give it a little bit room. I'll still put in a stop loss order. I always have that in because I just can't look at the screen. And if it takes off, then I just keep that stock order right there where its stop loss is, and then see what it does. Now, if it doesn't really move on cue, best thing is to just lock profits or take the loss and move on. Reversals is the name of the game right now. Everything is just either it's reversal or it breaks out and then reverses. You're having from both sides right now. It's a very choppy market. And trade small. That way you can control, if reversals don't happen, it's like a death by 1,000 knives if you don't manage your risk right now. And I'll come back to that. I'll show you some spreadsheet examples on how that is about to happen, exactly how the reversals are causing shakeouts. But I'm going to show you this one more trade. I think, Richard, you were talking about this Upwork. I think, if I recall correctly, on your Twitter feed.
Yeah, I think so. It had a pretty nasty reversal, but then looks like it found support right at the 50.
Yeah, so after support now, this is a type of trade where I would consider this, if you're trading, when the pattern's all choppy. So when a choppy pattern happens, there will be shakeouts. And it's really not a smooth break to 50, but let's say you traded this. Now this is going into earnings. This is 10 days going into earnings, but if you get this bounce, I didn't trade this, but I was watching this, it was on my screen. It does move up 22 days, going straight into earnings. Usually if you have a trade like that going into earnings, but the pattern is choppy, your probability drops as you get closer to earnings because why was the pattern choppy? So either you can decide to sell half of it, because if you have 22% profit going into earnings, either you ride it all the way in or reduce the trade, lock some profit. Looking at my experience now, I lock the profit now because what happens is, one, this was a very choppy move because this whole pattern is choppy here. But let's say you have this. Now, based on your position size and your average gains, if you have 22%, you should definitely be locking it in. I know O'Neill says if the pattern is right and it gaps up 20%, you hold it for 8 weeks. That's when everything is good, proper in the market, proper patterns are there. You can go that approach. But I'm more swing trader, more short-term trader. But that depends on the market. I haven't really seen a proper smooth move for the past few months. So if you have a small gain, take the risk. If you don't have this profit, this trade should not be done going into earnings, should not be taken because this is what happens. It has a huge gap down. But if you bought it at the 50-day and with the gap down, your 22% would actually come out pretty much, you would be down pretty much, the performance in your account will be pretty much flat on the trade. Maybe like you'll be up a few dollars or right on that break-even point of your gains. Either you sell it, but if you sold half of it, you would still be in the end left with 10% profit going into earnings. So this is how you manage some of these speculative trades, because this was a speculative, absolutely spec trade to me. I know it's got the numbers. Look, it's got 200, but now just watch this trade. If it forms another base on this side, recovers, that's when you trade, because it had 200% on the EPS. So that's pretty good. But that means I just need the stock to give me another base. That's how I would trade some of these stocks and on managing risk. But now let's go to the spreadsheet. Okay, so I have a few examples there. This is the bulk of this presentation, is this spreadsheet. All right, so based on the book, on the Mark's book, he has an example of batting average of 50. Let's say your batting average is 50%, and your position size, you're doing the 25% block trades. Now, your desired goal is 100% return on a 10K account. But your average gains for the year are 10%, average losses is 5%. So in this example, this is theoretical example. I'm going to get to the realistic examples as we move closer. 1 second. Okay. Now in this case, there's one gain, one loss, one gain, one loss. You know, I know this is not realistic, but I'm showing the example. It takes about 160 trades. You know, you could buy something today and sell something tomorrow, or you buy, 160 trades to make 100% return. And this is using the same equation in Mark's book. Now, I've done 233 trades as of right now. And that's not day trading at all. Like, I think I've done few day trades. Those are just exits. If I buy something today, I would be selling it tomorrow. Would be how I did some of my trades of that much. But now let's get more realistic. What is Apple? Okay. Now this is on this spreadsheet, I'm showing an example if your losses are less than 5% and your desired average gain on trades is 10% and your desired return is 100%, but your position size is still 25%. So to achieve the 100% goal, it will take 114 trades because your losses are smaller, but your gains are still bigger. So it's almost 3 to 1 on this. So you're making, it's a 3 to 1 odds, 3 to 9, but it's almost 3 to 1 odds here. This is also not as, no one's ever doing back to back like that. Now I've added some realism into the spreadsheet as a trader would. Let's say your batting average is 45% and your position size is 25%. Desired return is 100, average gain is 10, average loss is 3%. Now, this is what I'm showing right now is very accurate to what I've been doing because my batting average is around 45%. Mark is actually, I think he's at like 50 or 47, 49. I forgot exactly, but he's pretty good. Let's say if you're doing 25% block trades and right off the bat, like your first trade, second trade, third trade, fourth trade in a row, you're having losses. Now, this is obviously
would you be able to zoom in? Sorry, would you be able to zoom in a little bit on? People are saying it's a little bit hard to see.
Okay, is that better?
Yeah, I think that's much better.
Okay, let me do this. Okay, so I want you guys to imagine. So on this one, I'm using 25% blocks per trade, but this actually on 4 trades right off the hop, I'm already down $300. So that's more than the 2.5% risk gain. Now, what happens is on your 4th trade, but your 5th trade, for example, it worked. I had a 10% gain and it starts to recover the account. Now, then you have string of losses of all, I'm selling the trades at 3% right off the bat, but my position size is 2,500. So in this case, it will take, if I, losses, you can see the account recovers back to flat, break even. Then I have some gains. This is also not as realistic because I don't show position scale, how I scale into a position on this spreadsheet. It's because I'm keeping the size same at all times. But I showed the example here, but I had losses on the get-go. On this approach, we have 1, 2, 3, 4, 5, 6, 7, 8, 9, 7 losses in a row. And then we had some gains, 1, 2, 3, 4, 5, 6, 7, 8, 9, like about 10 gains in a row. Now, then some losses. And this is averaged in, break it down like this. It takes about 140 trades on, 139, 140, 141 trades to make 100%. This is having 25%, number of losing trades, 77, number of winning trades, 63, because this is with my batting average. Any questions so far? Because now I'm about to show the realistic spreadsheets. Okay. All right, now I'm going to zoom in on this. Okay, Richard, can you see this now?
Yep.
Okay. All right. So now I have the next three spreadsheets are very realistic on when it comes to trading, and I'm using position size and scaling and descaling a trade. So let's say you're starting tomorrow, clean slate, with $10,000 in a trading account, margin account. And I'm not touching margin. We're just using the margin account to go in and out the next day, so you don't hit those weird SEC rules. But starting off your account, instead of going 2,500, you take half of that. That will be 1,250 is your position size on your first trade. Right off the bat, there's a 3% loss. The account's down. Then you do a second trade. Same thing. You have losses. It goes down. Same thing on the third trade. Loss comes down. But remember the size. I'm maintaining the size here. And then the fourth trade is even smaller because I had 3 losses in a row at 3%. Now, because I need to manage my losses. So on fourth trade, it's still a loss. But at this point, the risk of the account is down to total account risk is 1.31. So $131 approximately. So something's really wrong off the start. But markets, giving opportunities and choppy period, this is very realistic. It happened to me this year. I had losses in a row, and my size was getting smaller. So the fifth trade is still a small account, but I got a 10% gain right off the hop, and just take the profit and move on, like literally. Now on the second sixth trade, what I did was I took the average of what the 1,250 and the slowest amount is 625, took the average in between amount and slightly pushing the throttle and see what happens. And I got another good trade. So literally the account took 6 trades to recover. So you went down and you recovered, but you're managing risk the entire time. Okay. And then I increased the size on trade number 7 to 10%, and this one, and the account is higher now at $10,150 profit. Now, going on that approach, I fully bump up my position to 25% on this one trade, and immediately follows with a loss at 3% loss, and the account is still back. Now, I'm still profitable, but I recovered my account, managed risk. I do another trade at 2,500 position size, and it's down 3%. I'm down to break even right now. Following trade, now I've reduced because I broke even. So following trade should be less. I trade small, loss, another loss. And these are all losses at 3% in this example, but I'm descaling my position sizes on the trade. I'm back again. I'm down to 9,868, which is about 1.3%, right there. Following trade, I come back at profit. So now I've recovered. I came back, went back. So this is what the entire market this year has been. It's been like this, but you have to manage your risk. So I do scale down when losses are coming. Just scale down, scale down, scale down. Any questions so far?
I'm not seeing any just yet.
Okay. All right. So I'm still trading small, but I'm getting some gains now. I got 10% here at $600 position size. I know it's like, what is it? How many Tesla shares is that? 1 share or 2 shares, something like that at that time. Maybe not even 1. You can't even buy that now. It's 700 something. But regardless what it is, it's a percentage what counts. You have another 10% here. Now I'm slowly increasing my size to full throttle to 2,500. Now I'm really pushing it. I'm human. I'm seeing gains coming in. I'm really going to hit like 50% right now. I'm going there. I'm hitting the throttle again, another, and then I'm really going like really large on my risk. But the problem is what Paul Tudor Jones, what I said was, sometimes you think you know what you're doing. That's great, but I'm hitting the throttle at full blast, at full position size, and probably using margin at this point, 10K each on 2 positions of 10K each. And I'm getting full throttle. And I'm, not recommending this to everyone because I'm breaking some of my own rules. I'm showing that in the spreadsheet. So, And then right there, the biggest losses usually happen when you're at the biggest. And then you have I literally have a 3% loss using a large size. And look, but the account is already up 38%. Yeah, I was being aggressive because I had some gains coming in. Then immediately after losers, I'm still like, a little beaten up. I'm still aggressive, but I'm slightly less. I'm fighting with myself, but the account is still 45%. I have a gain, but then followed by large losses. It's still 3%, but the position size is out of range. And say, made a mistake. I need to get the hell out. I need to follow my rules. My ego is fighting with me, So I have all these notes down, what I'm doing wrong, that I immediately scale down. I'm still losing, and I'm reducing the account. And then you can see the string of losses just keep on coming, full blast. Now, can you? How many of us have faced a situation like this? I know I have, and I'm sure I'm not the only one. This is string of trade number 25 to 46. What is that? Almost 20 trades in a row, but my account is still up 40% because I'm scaling in now. I'm showing in the failure as a, sometimes we all make mistakes, we get greedy. I'm showing that in there, and I'm also showing how immediately you rectify the situation and protect your gains. So let's say if you have 4 open trades, even if you have 4 open trades, you can do 4 trades in a row. I can have 4 of these trades and I'm still losing. And go think from that mindset. You can have 4 trades, but I'm just cutting my losses at each time. Okay, to keep your losses small at 2%, 3% from real trade, do you just set up stops at those percentages, or do you always place them? I always know where I'm buying, and I always know where that 2%, 3% stop is. When I enter the trade, my stops are also entered at the same time. I know exactly all my trades have an exit plan. How far between typical trades? And for the most part of this year, my average trade holding time has been 2 days, and average trade holding time for losses has been 2 days. My goal actually is keep the gains a little bit longer and the losses down to like 1 day, if possible. That's how this choppy period I've been trading like that. Usually last year I was able to keep the gains for much longer time horizon because the market was moving in much orderly fashion. So in this example, I'm going back and forth. I have, so you can see all the string of losses and look at the size. This is key. I'm reducing my size and keeping the size smallest as minimum to get some traction till I get, see, I feel good here and it comes down again. You go up, down, 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 go back up, come down, but the size is still small because I'm not getting any traction. And then once I do get some traction, I slowly raise the throttle and keep the size. Now on the average, now let's say this is a swing market has entered, but at least up to this point, my account is almost at 50% profit, and it's only been 52 trades. Don't look at these other trades. So this, on this approach, it would take about 100 trades to make 100% return. In this example, I actually went to 160 trades. That's 137% return. But it's how you descale and scale on that. That's the magic. Even a small account can make a difference. Now I'm going to go even more realistic. Okay, there's more data on this spreadsheet. Let me zoom in. There's a lot of stuff here. Richard, are you enjoying this? Bob, Richard? Yes.
Yeah, this is really cool.
Okay. So this spreadsheet is now superbly accurate to my trades. I've actually put in some of my real trade numbers on some of these trades and what happened on the gains and the losses side. I've actually baked in on this, on the next 2 spreadsheets. So let's say on the first trade, I'm already trading small. Have a loss, loss, loss. I'm descaled. And this is also a loss of 3%. The account's down, just like in the previous example. I'm down on this trade, but on this trade, I have 10% gain, locking profits, slowly going up. Increased size, I wrote some, just took the average number. I took 6 trades to break even. Then I move up to 2,500. And so remember, each of these could be 1 trade. you can have 4 trades at once. I could be buying and they could be all be losers, and I'm exiting them on the spot and then going into the next trades. Now I've bumped up to 2,500. Loss, immediately descaling down, loss, back to where I was at risk of 1.31. Now, there's a trade here. My account size is 625, is on this position, but I get a 62.5% gain on this small trade. It does happen now and then. On this example, it was my Novax trade. I actually had a small position, but I had a huge gain, account recovered. A few years ago, I actually did trade Tilray for the entire 1,000% return, but the position size was literally 1/16 of the account. There was a shakeout. I sold almost everything, but that one tiny position literally made the entire account size and made it into like 200% return. So, and it was this is when I was managing family accounts. So small position can give you these gains. You just, you're trading on the setups. So even if my account is small, but in one shot, I recovered the account in one shot repair. This has happened to me many times, but it's managing your risk reward relationship. That's what I'm trying to show here. See, people may laugh at a $625 position, but you won't be laughing at once your account is recovered. So now let's move forward.
Can I jump in with a question real quick?
Yep, sure.
Okay, I have it because I know you're kind of going with the $10,000 example. The question I had, I chatted in previously was, how do you account for the fact, again, you start off with a small account, but like, again, as we're working and we're getting paychecks and all that, we're putting money away each month. So like each month, like, you start off maybe with like, 5 or 10,000, but you're putting 100 or 200 or 500 a month in. How do you kind of work that in to bump up your trading?
Okay, in this example, I'm not putting anything in.
Okay.
Absolutely nothing in. That's something I learned from Mark. Once your money is in, you have to, entire this year, I've not put anything in. What I started off with is what I'm trading off with. The same thing happened at the last year at the competition. Obviously, I couldn't add anything. It will mess up the numbers. So I was completely trading off. I told the family, don't add anything to this account. It's going to mess up my performance. So yeah, no, I'm not adding anything in right now. That's the example I'm showing. You're not adding anything here, and you're keeping your risk reward relationship and descaling and increasing the throttle when the things are going well. That's a small account can make a difference. And let's see now. Let's see what happens now. The account is back to recovered here at this point, but my throttle is now slowly going up. And then you have, I've gone really big on this trade. And actually, got a 20% gain on one trade, like the CLF trade. Now you have another trade. This is also, see the highlighted things which are highlighted have bigger gains than the average or 10% gains. So keep that in mind in the slides. I have it marked up here. So average gain is 10%. So everything is calculated on 10%. Anything bigger is outlined here. This would be 20% gain. This would be 30%. So what happens is sometimes you do as a trader get into the trading in the zone mode. You're getting hits after hits. And that does happen. I'm hitting the throttle really aggressively right now. And then right there, the first sign comes, biggest loss, 3%. Now, I'm not saying you all should do this, but I'm giving you as a trader, sometimes I also get like carried away because I'm really like aggressive. I'm getting my trades are right. And I got like, this year I got like Planeteer, No Wax. I had a few trades and then back to back, but then I also had a big string of losers in a row. Then all of a sudden on this trade, it's a 10% loss. I'm actually showing this because this is a 10% loss. You have a gap down on a trade in a large position. Now, but I have a 61% profit. I have to prevent. I don't want to round trip my gains. So now immediately scale down, and I'm still being sloppy because I'm keeping the size at 25%, and I get hit. And then another trade, I get hit. As a human, I'm like, okay, things are really not working. So now I really descale because after getting beaten up here a bit. Now look at that. I have full string of losers all the way here. And this is a time when the market's really choppy. and I'm doing some feeler trades. Now, when this happens, you should like start researching, spend more time on researching stocks, read books, meditate, gain your mental capital, because you're having string of hits. I can have 4 trades in a loser, next week another losers, next week another losers, but the entire time I'm fighting and preserving my capital. So my account is up 56%. Now, it would have been better if I didn't make some of these sloppy mistakes, so I would have been close to 60%. But the goal is I'm preserving the capital. So this is where scenarios completely fallen off the bandwagon. Then it slowly starts to recover, and it starts to increase, and the account's back to like 60%. And then I just didn't do all, because I'm just rinsing and repeating what I did. And then in a nutshell, this would take about 100 trades to get 100% return. And if you go further, would be at like 152%. I mean, this is how Mark is doing. He's managing his risk. That's why he's up 233% on $1 million account. Is descales, upscales, but he's managing his risk to reward ratio at the entire time. Any questions?
Yeah.
What is trading in the zone mode? That's something that I made up because I love that book by Mark Douglas, Trading in the Zone. There is a mode, like sometimes I do get in that burst of trades. I'm getting trade after trade. I'm in a hot streak. It's like you're getting aces on you're playing, let's say you're playing poker, you're getting all the best hands. I'm aggressively flipping the coin at that time. And it's a short-lived, it's a burst, but my size is going up really aggressively, and then it does drop. Now, last year was there. We had those moments. We had, when Zoom was moving, we had Zoom, we had Microsoft was moving at the same time, Adobe was moving at the same time. You could have trades like that. And if you have position size management, you could have 4 of those type of trades in a row. Like right now, let's say you had 4 of the steel stocks moving, you would be in the zone on those. I didn't get them this time, so I'm not in the zone at that time for those trades.
There was another good one. Do you adjust position size based on other factors like the quality of the setup and market conditions, or is it purely based on whether you're on a winning or losing streak?
It depends. This is the art answer. I could trade off the patterns, and if I'm losing, I would be scaling down. I could actually trade off the spreadsheet now. At this stage, I can go either or. But if you're starting off, I would look at the patterns first, obviously, because if you're buying a wrong trade, it's not going to work. It's a bad trade to begin with. Hope that answers. But I do, in my spreadsheets, my spreadsheet is part of my trading now. Mark has been telling me that for years, and finally happened. The spreadsheet has made it into my trading. But the pivot points have to be accurate. That's spot on. Based on like 3 or 4 years of data, I kind of know my numbers on my batting average. So now what I'm doing with the spreadsheet, I'm keeping all my track on my trades, is I'm trying to keep my losses even tighter. Because if it's not working, it's not working. Yeah, there's more trades do happen. But that's the environment you're in. And once the environment's more smoother, you'll have better longer term trades on the gains. And if you're coming right off a bear market, I will be very, I would keep the trades for a longer time period. Okay, so in this example, I do show the losses a little bit larger and then reducing size. It's the same as the previous spreadsheet. I just cut and pasted out. I didn't rinse and repeat, but up to this point is all what I was putting in the data. And there's a lot of real data, percentage points are all baked in here. So on this type, it took about 100 trades to make 100%. So, and that's very realistically reasonable. Because you could be at 160 trades and about 60 trades later, it's 150% return. Now I'm going to go to another spreadsheet. On this example, I really reduced the loss to 2.8%, but the average gain is at 7%. So same thing. I have the same gains, the same exceptional trades, which had those big moves. But in this example, all the gains are normal gains are at 7%, but all the losses are less than 3%, so a negative 2.8%. So by doing this, and everything else is the same, on this example, it takes about 140 trades, because obviously your losses are smaller, but your gains are slightly smaller. It takes more time to reach 100%. But you could do it this way too. But everything else over here is exactly the same. I am scaling down when I'm wrong. Keeping the trades are really, the goal is to manage the size and where your exits are. So lower half the sheet is just, this is from the original slide. It's like one gain, one loss, one gain, one loss. So in this one, it's 7% gain, 7% loss. Because I'm not putting all my trade data, but up to this point, it's there up to 50% on 53 trades. It's spot on accurate to what I was doing. And I just repeat this, repeat the entire spreadsheet. If I'm losing, scaling down, winning, scaling up. And that alone is small account can go. And then once your account's at 20, you repeat that again, you keep repeating it. Faster you can repeat. So is there a number of losses in a row before you descale? So in this example, I had losses from trade 29 to trade 46 all in a row. And yeah, minimum, I have to trade. Let's say if my account's at 10K, I do need to place a trade. So it would be a position size would be locked at 625. But look how small the losses are in relationship to what the account is. To the 2,500 is the full block, 25% of the account. So at minimum, I will not be able to trade below 625. That's a hard, it's pointless after that. So how many positions do I open per week? So usually, let's say if I'm buying today, on Friday, I had 4 positions. I sold 2 today. So maximum 4. I don't do well when I go past 4, like performance-wise. I could, depending on, because my time horizons, even though I'm a full-time trader, but I can't see the market all entire day. I'm running a medical practice at the same time. So my morning time is 9:30 to 10. And then I do get a little bit of time from 3:30 to 4 to look at the markets. And in between, I have alerts coming in. I can see the screen, but I can't look at the screen like all the time. So, my time horizon is a little tight, but everything is planned. I don't randomly buy things. If it's not moving, I sell out. Because if you don't, you'll have a trade like Upstart, which failed, or earnings gap down. So I have to watch out for those. When do you adjust your standard position size up after your account grown up by X, or you lock for 1 year? Can you explain that question? Richard, I don't understand that.
Let's see, and if you could just retype that. So I think if you make 50% on your money, do you rescale up your initial position size?
So position sizes are so in this example, goal was 100%. Now, once 100% is reached, I can decide if I want to play with the gains, then the position size would be 25% of the size. Now that depends on the market. This example for keeping everyone simple, my goal was to show how to get to 100%. Once you pass that, yeah, I do that. But if you're starting off, I want you to guys at least attain the triple digits by keeping it simple, and then the practice. You would reset the account at, like, let's say the account's at 20,000. Obviously, my 4 trades would be at $5,000 each. So yeah, but it's all percentage. Size has no bearing. Size plays a role psychologically. Everyone's different on this one. I know one of my friends, if I tell him a size that I can handle, he won't be able to handle it. So those are issues for, as you move up, you'll pick up on those issues. But if you keep your rules the same, it's still percentages. How many simultaneous trades you manage to handle? 4. I could buy 4 at once if they're all moving. But I do 1 at a time, order of breakout on my watch list.
And Bob had a question about
Yeah.
how much time before earnings you would still be willing to buy a position. So if a stock has earnings in 5 days, would you still try a setup?
If the stock pattern is there and if it's working, if I'm in profit, but I need to be at 10% profit before going into earnings. If I do not get a 10% profit, I would sell out.
But you would still try the setup, just you might sell.
Yeah,
the day
I will try
before.
the setup, but I won't do a day before earnings. I'm not
Right.
playing earnings. That's a 50-50 probability game at that point. But I would trade the setup, absolutely. Like that UPST example I showed, that was a perfect example. You could trade that on technical level only, and capture 22% gain or even 10% gain. And then, once you have some profit, options open up. You could either reduce the trade and see what it does in earnings, or you go through earnings with the full profit, because I need that cushion in that position going into earnings. There was a trade I was trading last week, it was going into earnings, but I had like 2% profit. I'm like, I'm out. There's no point. There's no point even playing this move. So can you show an example how you set up a 3% stop? Sure. Let me pull up the slides again. Okay. Okay, this is a perfect example. On Horizon Therapeutics, the breakout was at around 94 on the chart, and my stop was actually, 3% below the breakout. In this case, it was actually the low of the previous day off the breakout. So that's where it was exactly 3%, like 3.10. And that's where my stop was. It was even tighter because once it gapped up, I was using the day's low. I even raised the stop up. Now, but this is the original stop. So on the next day, it does gap down, but in a few minutes it did recover. So I give it, at 9:30 it opens up. I give it like 10 minutes, let it see, and it did recover. So I held it. But usually if it doesn't recover, I will probably sell it. In this case, it did close up really fast. So I held on to it. And there are many times I would reduce half the trade and see how it would move forward. But the stops do go, and I do manage risk really tight if my stops are hit. So, and then the following day, it just didn't work. So I was out. So this is that's why I put this example in there, how I was playing this trade. On this trade, my stop was on the previous day's low. This is a low cheat area. This is a very advanced trade. Mark was talking about it. I was looking at this. So my stop was really tight. I think it was about like maybe 2% max. So, and this is a trade I couldn't even use the margin requirement so high. So I can only do very like limited size. I wasn't going margin in this trade at all, just following my position sizes. Okay, does your okay, we have a few questions there. Does your position management rules change if it's an IPO? Nope, it does not change if it's an IPO. In fact, IPO, I'm even more risk averse because the shakeouts, volatility, all that stuff happens. But I play the setups. I'm in the case of the question that half of the position was stopped and the second half reached the goal. How did you count them? 2 trades or single one? I would just, take the profit and count as a one full trade. I wouldn't count as a single 2 trades. I would just, that's the same entity, I'm playing that move. When I scale up positions to 2,500, 10,000, your stop loss is still the same percent? No. When I'm doing 10,000, I don't recommend anyone doing that. In fact, at that time, my stop probably is 1%. If I'm going that aggressive, and that's something Mark has a hard line. He won't do that, because if he's, once you have size, I would never recommend anyone do that, because you can't get out then. But if you are playing it, it would be less than 1%. So technically, your absolute loss dollars on the highest position size is much more than standard loss dollars. But the point is, when things are working, you go aggressive, profit makes significant. And even when you take a large loss, it's only on one trade. Yes, when there is a large loss, it usually tends up being on one trade. And when in doubt, I sell everything, because either I'm going too aggressive, I'm not seeing things clearly, or I could be dangerous to what I'm doing. Especially when I was managing family money on my journey to become a hedge fund manager, dealing with family money, they can't handle on, I'll give you a perfect example. Family cannot handle, they say, you know, like if it's your client, right? They'll say, oh, we can handle 10% loss on a position. They can't even handle 5% loss. Human psychology, they're like, oh my God, this big number. But in the big scheme of things, it's a position, but it's psychologically, you know, so when you're dealing with clients, that's how it is. My stops are always tight. They're always placed in. When I'm aggressive, I'm keeping a very tight leash. On rare occasions, I've sold aftermarket. Hood is a perfect example. I had a 50% return on Hood, and I was like, this is too fast. It's very spec trade. I sold it aftermarket. I didn't care what the next day went up even higher. It's just, I was in a situation either sell half or take the 50% profit. I took the 50% profit. Any tips on growth position traders initial into your system? So could you explain that question in more? Are you talking about how you start off? When you're starting off, you should have position size should be on from day one. In fact, if you're starting fresh tomorrow, have a small position. Don't do full 25% position until you have some traction. Because if you don't have traction in your account, it's your money. You're going to take a loss on the fly. Why take that abuse? So do a small trade, get some traction, know where the buy points are, where the exits are. You can do a 5% exit. You don't 3% is, it's very aggressive. Mark is at 5%. Mark is at 5%. Because he's looking at the screen all day. I'm driving from 10 o'clock. I'm in the road, so I have to keep my. There's no way I can see what's going on the phone. I'm stuck in lots of traffic when I drive, so there's no way I can look at the screen. 3% is my personal goal, but 5 is you'll be fine with 5 or 6. But your buy has to be correct. Any more questions, Richard? Do you see anything else?
Not at the moment, I don't think.
Okay. Now, did the spreadsheet help? Because this is a very complex material. I know it sounds very simple, but this is all discipline-based trading, because you have to manage risk, especially when your size comes up and you're trading with size. It's more than important, because then execution is an issue. But as I said, a small account can become big. What liquidity you aim in your buys? I usually like stock with like 200,000 shares average trading volume. I know I've seen some trades that even Mark has done, which are very slightly less liquid. But if your account is small, it shouldn't be an issue. It's just I just concerned about the exits. Even if a share is trading, I don't do anything below like $7 a share. I don't like low quality stocks. I know they tend to move sometimes, but I don't touch them. I like $10 and above minimum. I do great when it's $50 and above per share. That's actually my sweet spot zone. Higher the better. What kind of broker orders you place? I either do market orders or stop limit orders if I'm not able to see the screen. And I do like it if my stop is ripped out and I didn't get the entire position. Those are really good trades. That means I got a bad fill, but that usually means that trade is profitable. So market or stop limit orders or limit orders, it depends, but it's usually stop goes into market. Did you adjust your size for the volatility of the stock? I adjust the size based on my performance. So if a stock and where my stops are. So let's say a stock is volatile and my stop exit, like where I need to be out, is at 4%. I would be, now my average is 3%. I don't want to mess those numbers up. So my trade on that trade, if I'm giving it 4% room, it would be smaller than the required position sizes that I was talking about. Just because I'm giving it 5% room, 4% room on the downside, my size is going to be smaller. So in the end, it doesn't mess up my numbers. It comes in a wash. So it would be even smaller position size than what I was showing. In order to keep my risk around 3%, are you taking trades that have a pivot or technical stop less than 3% deep? I do trade on pivots. And yeah, if they're less than 3% deep, let's say my exit is less than 3% deep, I can go a little bit large on those trades. But then they have to move on like the next day or that day, the minute I buy. What percentage of trades are held for more than 10% gain? Now, for this market, I've been locking in those profits. Now, last year I let them go till the stock chart, or the pattern changed its character. I would let them ride. In the past, I would let the trade ride. But this year, since the market is really choppy, I'm just taking in the points. How fast did you increase your position size? Did you increase position size after 1 or 2 wins? It's like on the spreadsheet. Let me go this example here. This is the most realistic one. Okay, so on this spreadsheet, like you see, like all of a sudden I was down, I recovered, I slowly go up. Yeah, I'm increasing if I'm getting successive wins. So let's say in this case it was really small and I go up, because this can go down too. Like in this case, it went up and came down. So it goes up and I am increasing its size. And if the stocks are moving, the market's moving, like the sector's moving, I would be increasing size based on that. Do you permit in the way up, or do you buy the whole position at once? I used to permit on the way up. Let's say if I'm doing 25% buys, like 25% for that one trade. Let's say it's Apple, I'm buying 25% of Apple in that trade. In the past, I have done the first breakout will be 50% of that. And absolutely, if it goes up, it would be another 2%. I would add the 30% trade, and it goes up to 5%. I would go up full position, 25%. By then it will be, covered. I've done that. Last year I did that all throughout the year. This year, no. This year I didn't do it. But last year I've done it. So the same William O'Neill style of permitting way up, but there's a limit where I draw the limit. So in this review, I'm closing trade at 10%. Yes, I am closing 10% gain based on my trading batting average for the year. So I have all my data. So there are trades that I have done 60% return, 50% return, 20% return. But on the average, when I do all the batting averages and the numbers, it's coming out, optimal numbers coming around like 10%. And that's in Mark's book, actually, because I am doing lots of trades. So it's like I'm moving merchandise. I need to, last year my average gain was a little bit higher than this year. Just stock setups or we're going for longer moves. Do you buy intraday at the pivot point, no matter what? Volume sometimes doesn't show up. I'm buying on the breakout. Volume, I would like to see it as the day progresses, especially near the end of the day. I want to see the volume, but I do buy on the price breakout and provided the price holds. I hope that answers. Richard, let me know if I'm missing some question. Sure. I see a lot of breakouts reversing the same days. Yeah, a lot of breakouts happening and reversing. This has been a short-term market. There's a lot of selling and rotation happening at the same time. Related to volume confirmation, does anyone know if a broker that can put a limit or market order conditional? Yeah, you can do some conditional orders. I don't know about volume. I used to do conditional orders, but I stopped. It just gets too messy for me. The pivot price and stock is trading at intraday at 20%. I don't know how to handle that. You may have to look at interactive brokers for that type of trade. I know Fidelity can do so much on their Active Trader Pro. TradeStation can do, but I don't really use TradeStation as a broker. They got some weird things going on every time with the margin accounts. I don't like it. You tighten your stop loss as you push your position. Yes, my stops are extremely tight if I'm very, very aggressive. I mean, at that point, when I'm most aggressive, my stop is absolutely super tight. Given the huge number of trades, where do you fish for stocks? Yeah, so I do look at MarketSmith 250 straight off the bat. Then I go to Mark's lists. There's private templates. I'll pull up MarketSmith right now. All right, this is where I look at stocks. Okay, so I do go here on go to 50. I do check this list. This is for years. This is all I used. This is literally, I lived on this list. I didn't even bother with anything else. But they got a lot of new lists now. I do look at the Minervini trend templates. I do compare these stocks. I've actually started to look at RS Blue Line Dot, breakaway gap, 50-day pullback on these lists. And then they have pretty much the newspaper list. I do like the 85-85 index. IBD 50, everybody watches it. It's okay. 85-85 is pretty good. New America, absolutely. I do browse that. IPOs I do check. And then I make, play with the screeners. But by default, I always come back here to this. This is like a habit. I go through this list and these lists, and I've started adding some of these new lists into the mix. Richard, can you collaborate on MarketSmith? I know you got some slides, presentations on that too, right?
Yeah, I use MarketSmith as well. I have a little bit of a different process where I like kind of download the data and then do my own kind of scanning in Excel. But yeah, no, Mike Webster is the brain behind the MarketSmith 250 and all these things, and he's awesome. So
yeah, he made. I remember when I was beta testing this. He was involved in this. So there's some things that Pro 50 does, but yeah, there's a lot of things in here. One of the good lists in the newspaper is sector leaders list. That's actually, I wish they would put that in here. That's a really, really, really good list. I love sector leaders. That's in the newspaper. Now there's a question. Mark template added one for month. How do you use this one? What kind of stocks looked at? So Mark template is probably, let's look at the stock here, like 4 months template. So using 4 months instead of 5 months, it's now on a trade like this, you will try to see could this be a pivot right there? Does it like come down, tightens up? So he's using 4 months instead of 5 months on this. I'm surprised. I actually first time seeing that too. I just click on it. 1 month is more aggressive. If you go on 1 month, for example, this would be more. See, these stocks are already in a trend, so these are very aggressive plays. If they give a setup like for this is too low for me. I wouldn't even look at that. I think this was somewhere here. It was took off. I'll wait for a pattern to form.
Rosie, I'll go when my thing is over. Please, just go.
And how do you know MPA compares to IBD services? I don't use Leaderboard or Swing Trader anymore. I used it before. I'm a MarketSmith guy, so don't really. They have their pros and cons. Richard, can you talk more about Leaderboard or Swing Trader?
I haven't used those products, but if you don't have MarketSmith and are looking for something similar, just if you have the IBD digital subscription, they've got their IBD stock screener, which I think is like severely underused. I don't see anybody talking about it, but it can do a lot of the screening capabilities that MarketSmith can, and it's just completely included with the IBD digital. So definitely check that out if you don't have MarketSmith.
Hey, Anish.
Yes.
I've actually used Leaderboard. I've actually used Leaderboard and Swing Trader. I've kind of, take advantage when they offer it for free. I found Swing Trader really difficult because it's like essentially when you get an alert from Swing Trader to like say buy a stock that at a particular price, like you kind of have to get in there like right away and buy that stock, or else, like if you like the end of the afternoon or something, if you're at work during the day and you don't have access to making trades, you'll end up missing a lot of trades. Leaderboard and kind of, there's some things I like on it, but I don't think it's a necessity. It's kind of a MarketSmith light, where they kind of mark up the trades for you. The difference between MarketSmith and Leaderboard is that Leaderboard, they mark up their charts like individually, like so like a person actually marks up that chart that they're buying, whereas MarketSmith, all of these stuff are computer generated or algorithms. Again, like Richard said, I think if you know, because MarketSmith's pretty expensive. So like if you're not gonna use MarketSmith, the stock screener is really excellent. It just doesn't have as many of the rankings, but it tracks like every stock, like MarketSmith. And you know, with MarketSmith, like you have like 100 and something different items that you could choose from to scan your stocks. Whereas a stock screener on Investor's website, you may only have like 20, but those 20 are like all like the Ken Slim criteria, you know, the RS rating, EPS comp ratings, and then other volume and price things. So it's a really good, you know, obviously a much cheaper version to use than MarketSmith, and I think you can get as much information out of it as MarketSmith.
Okay, that's good. Good to know. There's a very interesting question by Anish Singh here. He says he noticed my position size, and that's a very good observation. I'm going to talk about that right now. Position size as percentage of total or fixed to starting equity. I don't take into account closed equity for deciding position size. For example, when I scale back to 10,000 size, it's still only about 60% of total equity. All right, so yes, that is something I was going to talk about. Good observation. So in this example, what I've been doing, and I purposely kept the trades account small, is because let's say we want to, you know, get the account to like 20K. Now, this is where I'm really hitting the throttle. I am pushing, you know, a position here at 10K and using a margin here at 10K. I know that's very max, but or let's say I do one trade at a time, close it, buy it, close it, buy it, right? Now, I do change. Now, in this case, I'm still leaving the profit untapped. Now, let's say if I was doing 4 positions there, I am using the profit a little bit on this trade and then this trade, because if it's, you know, I am pushing the throttle.
All right, when I'm done, please just go swim.
Huh? No, hello. I didn't get that. Richard, what was that?
I think somebody was unmuted, but I can't. Oh,
okay. Don't worry about it. Okay, so I do sometimes. I don't want to use a profit till the account was 100%, but at times when I'm getting a lot of trades, I am using the profit. But when you use your profit, there is that risk. You know, like in this case, it does take a look. It went from 168, 16,000, so 68%, all the way down to 61%. So that does happen when you start using your profit. Now, I do scale back and forth, but there is a limit that I do keep. This is only when it's very hot, like I'm hitting a winning streak. But otherwise, I do keep the size in check at all times, because now at 20,000, I will probably reset myself and then start from different size numbers, but it still would be in percentage wise would be, you know, 5,000 or less. And then we go from those steps, rinse and repeat. Because without discipline, you'll be all over the map. Okay, let's see. How do you battle against risk-based position sizing? Could you explain that more? How do you determine not to sell all at target goal when you have a big winner? When I have a big winner, I can look options open up as a stock trader. Now, let's say, for example, on this trade, I had a small position, but I had a 62%, I had a huge gain. Not in this gain. Where is that? On this gain, this trade. Now, I'm not going to sit there. Yeah, the stock can go 100%, in which it did. But at that point, I just don't care. I mean, it's a huge gain. It's on my spreadsheet. That gain is on the. If you do a bell curve example, it's on the deeper end on the gain side. I'm just going to take the profit because I'm going to do frequent. My goal is to do my batting average, to do this as much as I can, and keeping my risk very tight. Before, I used to let trades run right. the way I was doing exactly the way Willem O'Neill was. I would push the trades and let him ride. But once I met Mark and more of his influence, I started to understand how these numbers work. And I could, based on my personality, I like to do things, you know, speed. I need the speed here, you know, or I would say I have the need for speed. I don't use average true range. Oh, average true range of a stock is high using relative stop loss, and that's stop you very quickly. It doesn't make sense. I don't use ATR. I haven't figured out how to use ATR. So I just look at the pivot and where my stop should be. I go from there. I do not use ATR. If it doesn't break out, if it makes me a loss, I'm going to be out. Richard, any questions? Bob?
Let's see. There's one about ATR. If you use that,
Yeah, I don't use ATR at all. Can you explain how you limit your total equity risk with your max average stop? My limit and total equity risk is based on my batting average. So, so based on my desired returns, this is in Mark's book, the equations are there. So let's say to make 100% return, if your average gain is 10%, your average loss is 3%, and your batting average is 45. So in this, that would mean I have 77 loser trades. And there could be, but in reality, you could have break-even trades, or you could have a small trade now and a winning trade at 63. That is if your sizes are the same. In this example, I'm showing, in real life example, is my size fluctuates. And yet the loser trades are still 77 and winner trades are 63. And I still come out ahead. Because sometimes a small trade can give you a huge gain, or you can have consistent of losers, but your size is small. So I'm using a positioned size. So if I do this example where everything is static, it actually this is the example in the book. This is the static example. You know, keep the position size. There's a chart in the book too. Size is the same, and your gain and your losses are fixed. Yeah, it will take 160 trades to reach this goal. Just on 50% probability, you win one, you lose one. But that's not reality. This is what reality is to me, because I am changing the size of the position if I'm having losers, because this is the psychological portion of the trading. You know,
if you have four trades on, if you go back to the simple one, the 50%, that one. If you have 4 trades on and your potential loss is 125 with each trade, then aren't you risking more than 2.5% of your portfolio?
So yeah. So in this case, let's see. No, because you have your gain at the same time. So these are, you know, you have one gain then one loss. Now in this, that's why I was going in this example. I was trying to show you have losses in a row. And if I'm starting off, I'm not going to start off with that size. That's what if I'm starting off fresh tomorrow, I'm not going to go 25%. I'm going to start small till I have some traction in the account. Because in this case example, it's all set to one win, one gain at the same time. Now, obviously, if I have 4 losers, so obviously it will come down. But the Mark's example book actually has something just like this. So, but that's theoretical. I hope that makes sense. I hope I explained it right. So in this example, I do show that I start off with a large size. I'm already down here. So in this case, I'm down past that limit. Because if I don't manage my size, I'm down $300 here. So that's 3%, you know, it's more than 2.25% risk of the account. This is what I don't want, is this right here. I don't want this. I don't want this at all. So I want to start small and build my way up. I used to do this. And it doesn't work. It never worked out for my cycle, for my own mental state. It was crap. Because I started off losing, and then you know I've had a string of losers in a row, and it just, in this example, if you're having a lot of losers, keeping the size same, it's more it's psychologically not for me. Like I need to scale and scale up. So in this example, it takes about 140 trades to break to go 100%. But this is what I don't like, is this right here. Starting off large and losers right there. Okay. When did you decide to exit out of a trade? It all depends. If my losses hit, I'm out. If the profit's there, then I decide to either sell half or let the trade ride or take the whole trade as a profit. If it meets my average gain, what am I in my, on my big list of trades, my average gain, because I have trades which are 25%, 30%, 10%, but in the average, it averages it out to around 10. So if Ryan says it is safe to say before you take the trade, you know your size, loss and gain, you will close the trade. Yeah, I do know my size of the trade, what I'm about to place. Absolutely. Everything is planned when I hit before I hit the market order. Is there any part of total equity portfolio invested in other strategies? Like, no, this is strictly trading account. Staggered stops, I do use if it's a really hot stock and there's momentum built in. I did that the last year with Zoom. I had a staggered stop. Initial stop was at 3%, another stop was at 5%, just because it was the leading stock. So that's based on situation. I will do that, but no more than 5%. But I will have reduced position at that time if it's going down. Mark uses it all the time. I rarely go that approach. How would you recommend using margin and knowing when to hit the gas? So using margin, you have to, I would start using margin when you have profit baked into your account. Not just small profit, you gotta have decent profit and things have to be really going, because especially in this choppy market, start using margin, it's gonna chop your account up, because it's, and I would never recommend anyone going like full max position. I've done it in the past. I did it last year because I had to perform at the competition, but it's a crapshoot, because one wrong move, the margin is magnifies your losses. So till you get the hang of it on just trading, but now have a margin account, because you can, if you do a cash account, you can't get out the next day. But you don't have to use margin right now. I don't tell until you get, till you start playing and understanding how this works. I don't recommend using margin, but you got to do this in a margin account so you can get out the next day. That's just the way. Or you're stuck with holding a position and your losses are going out of control on a cash account. I always, do you start with a small position? Then yes, I always start with a small position, then increase my way up, always. I used to go full 25%, but then this happens. Not this, this would happen. And I did not like this, because this went beyond my risk level. Once I understood what I was doing wrong here, this is not what I want ever. I don't want to be in this situation. In fact, I learned this when I was managing other people's money, not to do this. Okay, when you tighten your stop as you get aggressive, are you shooting for better R&R? Yeah, I'm hoping, if I can get risk reward, yeah, I would like 5R, 3R, yeah. At the same time, by keeping 10% target, let's say 1% loss of 10 to 1, yeah. I am looking at that reward. Yeah, if the stock is doing fine, yeah, absolutely. Do you lower your target? Let's say 2%, stay 2 to 1. I don't really lower my targets. I want to hit I know what my average is, so I'm trying to get around that ballpark range on the percentage wise. But I do look at R&R, yeah. For stock like docs, kind of like scaling. For a stock like, what kind of scaling would you have done? All right, let's look up DOCS. So this was on my watch list. I was trying to buy it. Actually, was I trying to buy it right there? It didn't move. So in this case, it would have been 65.35. Probably what's the range here? Let me do this really quick. Let's see, I'm pulling up my calculator. What's this? 61. Okay, so on this trade, if I was trading it, my actually entry was on this plan 62.73 was what I was doing aggressive. I knew everybody was looking at this one, so I was going at this pivot. So on this pivot, my entry would have been at 62 and the stop would have been at the day's low at 58.93. That's how aggressive I would be playing this. Yeah, it worked, but the next day it turned, so I was actually out on this day. Now, that's how I would have traded it. Now, there was no setup here. I think this is the earnings, so I wasn't going into earnings with this. So now after earnings, now I'm going to probably like look at a pivot point here. If it tightens up or makes a flag, I would trade off that. But my stop would be really tight. I don't want a wide stop. If I do a wide stop and the position is small, I don't like that. It's just, I wanted to see a tight setup. Do you journal trades? Yep, I do journal all my trades. I have actually journaled since last year. Last year I wasn't able to. I wrote all down. I didn't write my thoughts, but this year every trade has been journalized. Every single trade. Let's see. Please review NVDA. Richard, any questions from your end?
I was just gonna ask you, when you general trade, what are some stuff that you keep track of? Like, do you also write down like the volume run rate on the buy, anything like that, or is it just your average price, number of shares, all that stuff?
I write my thoughts actually. I do take a screenshot. I have so many screenshots that I can't even keep track of because I take the whole snapshot of what I'm doing. If it's something unique that I'm doing, I would really print out the chart. But I do write my thoughts, what I'm looking at and what's doing, because there's a reason I'm making that trade. And so I usually go with that because volume is always there when I'm buying a trade. So it's something's odd, then I'll put that, like I'll specifically write it. Is
Right.
that how do you journal?
Yeah, I took a screenshot. I've just a Google Doc. I want to get more elaborate. I've been looking to maybe like trade sync or something if I can do it automatically, but probably doing it manually helps a bunch too. Do you
Yeah,
use
I have
like
trade
OneNote?
sync. I haven't
Yeah.
used it fully because I'm using Mark's platform because it calculates everything for me. So I use that, but I can only write 150 characters on it. So I have to be like brief on what I write. I should look into trade sync. I have it. I just don't use it. But we'll talk in private. I'll see how you're doing it. Maybe get some pointers on that from you. Okay, let's see. Please review NVIDIA. I'll let Richard. Why don't you review NVIDIA?
Sure, you've talked enough. No, it's been great. So obviously you've got earnings coming up in 2 days. So if you're trading this, it's got to be, you've got to get cushion before earnings if you're going to hold into it. And this is kind of the situation that I was asking you earlier, whether you would trade this, Anish. But you've got a little bit of a pivot. You had an upside reversal on this area here. Let me bring up my annotation tool. But these highs, that's a little bit of a pivot, but obviously you've got this one here as well. Yeah, but I mean, for me, you've only got 2 days. It's going to be hard to make a 10%, get 10% profit cushion before you just have to sell and watch to see how it reacts to earnings.
Yeah, because in earnings, it can come down or it can go up. So you have two sides.
Like you said, it's a binary event. So
yeah, it's a binary event. Now there is a strategy. It's a very complex IBD. You can do weekly options and execute the shares, but I don't recommend that. It's more mess and more headaches with that approach, especially on a liquid stock like this. I'll just wait for a setup. Like this was after earnings. You had this setup right there. This is a beautiful setup right there. So you can get a setup after earnings and you can let it rip. So I'm just gonna wait for the setup. A setup is forming. it's right there, but I'm just gonna wait for the earnings now. Well, you know, the volume's totally drying up though. So it's a binary event.
Yeah, look how tight it was right here. Super tight.
Yeah, that was really good. I had a chart marked up there and didn't trade it because I was playing AMAT. So dumb. Missed that trade.
AMAT has frustrated me so much.
Oh my God, I don't want to trade that stock anymore. Oh my God, this is like chop. Okay, for everyone, this is chop fest. This is what Mark has been kicked off this. You would buy it and chop and picks up, chop, picks up, breaks out, chops, picks up. Look, it breaks out and chop. Oh my God, it's just. But you know, this will tighten up when everyone has given up on it. This will take off and everyone's given up on it. And obviously binary even in 3 days, I'm not even touching it. So there is that upper, you know, we go on weekly chart, that's gonna break out, you know. Yep, there it is. Yeah, AI's already picked it up. So consolidation. Did you follow any individual stocks to gauge the market if you see stock breakouts, even if indexes are pressure? Okay, so I used to go the IBD approach, look at the general market index and then the sectors and the stocks. And I did good on that, but now with huge influence by Mark, I've actually flipped it. I look at stocks now. I do look at the market. Also, if I'm trading the markets, I do trade the Qs and the SPYs. I do really well if I'm shorting the Qs and the SPYs at those times, but otherwise I do trade them. But I just look at if the stock is setting up and RS is up, everything is good. If it's in its own cycle, I will be trading it. Now, but I look at my track record. If I'm having a lot of losers in a row, my size is small. I need traction to increase size. So I am gauging that. So if I'm having like 4 or 5 losers, I already know something's wrong in the market. So that's already telling me, my stocks are telling me things are not moving right now. So my own performance gives me a heads up. It's a choppy period. Something's weird's happening. The trade, you know, because I'm trading them fast. Leave Sorday uses on it. So he's a really cool guy. Don't know trade material. I have no idea what that is. Do you know what that is, Richard?
I haven't heard it either, but I assume it's pretty similar to TradeSync, and you can journal and track metrics.
Gotcha. When do I determine to go cash? So right now I'm 50% in cash. I do go cash if I'm having this type of situations happening. This is usually where I am going in. Where's that slide? I am usually in cash around this time. So you see, these are like feeler trades. When I'm doing very small trades, it would be like one trade and the entire account's in cash. So this is when I'm in cash, when I'm having lots of losers in a row. That means something is wrong. I'd rather be in cash and take a fresh look at it. I could even go smaller than this and have a really field trade of what's going on. So yeah, this is when I go in cash, when I have losers coming in. Do you follow any market trend system? I assume you follow Marini's. Do you use any of the system? My stuff is built, I learned strictly from Can Slim, Willem O'Neill's. I've been all their workshops. And then, you know, Mark's stuff is evolved on top of it. I use everything in the Can Slim shop. You know, that's the only thing I use. I don't use anything else. What's a minimum RS to consider trade? RS, are we looking at RS line? Are we looking at RS? Which RS line are we looking at? Relative strength, 80 and above, 75 and above. I start looking at stuff. If it's on the RS line, if it's turning, few factors. It's not the deciding factor, but obviously the best stocks will have the best RS. That's just naturally it happens. Richard, any more questions, or do you see anything if I missed something?
I think you've covered most of the questions here.
Okay. Well, guys, I hope everyone and you guys go to IBD Market. Yep, I've gone to IBD Market School. That is actually pretty good. I don't use all the mechanics of Market School because they would talk about. So it's based on this. NASDAQ. So it's based on like when it's above the 21-day moving average, you hit the throttle. Let's say if it taps here, you reduce position size, go back up. There's a lot of mechanics involved in it. I don't think everybody uses it. I did the two, I actually repeated that twice. My main thing was that I took away from it, and you guys will get an edge on this one too, is when the NASDAQ is above the 21-day moving average, that usually is a good sign. You know, this is usually when things are moving really well. This is, you know, and they're absolutely going to sell under pressure if it's below the 21-day moving average. That's one of the big, in the end, that's one of the big takeaways. Now, but your stocks could be doing different, and you could be in a winning trade. Like, let's say, for example, Taser in 2000, you know, there was few other stocks last year. Market's down, Zoom is up. Let's look at Zoom really quick from last year. Okay, so it was, where did the market crash? February. Okay, so in February, this is down, but it's not as steep as the indexes were. So this is what it was tightening up. What was it? No, it's this year. Oh no, let me look at last year. Perfect example. Okay, there we go. Market's down. You know, world is falling. We're all thinking, what's going on? My practice is shut down. All kinds of hell is breaking loose. But this stock is fighting the trend right there. This stock is in its own cycle, literally in its own cycle. And I actually missed this trade right there. I was buying it right there and missed it. Oh, but I got this trade though. But that's how you look at stock on their own cycle. So I use stocks as my, you know, what I'm looking at. Yeah, this recording will be available. I will be releasing this. Absolutely. So after how many wins do you start decreasing position? Only after one trade? Oh, okay. So let me pull up this example here. So there's no, like, it's not like a count, but it's more like what I'm seeing. Let's say in this example, initially I had losers, so they were already small. Then I started picking up traction. Then second trade was slightly bigger. Third trade was bigger. And then immediately I went big, then it came down. So when it came down, I still kept the size up, seeing because I had gains from these trades. And then I had another loser. Now, okay, this gain didn't work. Let me reduce size again, and then size again. So I'm just keeping an eye out on the risk, because I'm also looking at where my account is. So let's say I'm recovering right now. After recovery, I'm actually going small. So because it was up here on profit, now it's recovered and I'm going small. So you want to see this traction, because you know you have multiple trades. You're not just buying one stock. Let's say, as I said, you can have 4 to 8. What was it on? Like right here, if you do half of this max position size, you have 2 trades here. So you know you can have like 1, 2, 3, 4, 5, 6, 7, 8. You know, you can start playing around with this and see if you get some traction. Then you can start increasing size. You know, so I play around with this. Previous recordings, I got few videos on there over the years. A lot of stuff has not been published. It was at Meetup. It was live events. I did a lot of live events. So there's no recording of that for a decade's worth of stuff. I would say right now, Richard's channel is the best place to go. Shout out to him. He's in Seattle now. He moved there. So congrats to Richard. But his channel's got amazing wealth of information. You could spend, Richard, how many hours of data is it on your channel?
I don't know, but I think I've made like 300 videos, but I think the podcasts are my favorite thing that I've done, and I've done about 35 of those. So
how many hours each podcast is? How long?
Each probably hour 15.
There you go. That's a lot of data.
Yeah, it is.
It's a lot.
There's probably a year's worth of education on just that one YouTube page. But because by the time you even if it's an hour, like if you stop and take notes, it's going to take you 2 hours to watch his interviews.
Right.
I mean, Yeah, I mean, on the airplane, it took me 2 trips to finish 1 full video when I was flying to see family. It's my in-flight entertainment, Richard's videos. Okay, so do I place trades the night before? No, I do not place any live trades in the system at night. I do the research. I do get 9:30 to 10. I have given that my leeway time every day. I do get to see the market at those out the first 30 minutes. Rest of the time, I do get to see near the end of the day. 3:30 to 4, but I have alerts placed in, everything's placed in, stops are placed in when I'm on the road. When I'm driving, I place the orders in for the stops at that time. I don't place the orders in pre-market because the algos can sometimes sniff it. Especially last year, I saw it trade. It was a when I was using a managed account for the competition. There was a size trade, a position trade was there, and algo sniffed it, but the bar never showed up on the charts. I was like, what's up with that? So I place trades only when the market is active, not beforehand. And I don't, let's see what else. How do I decide when I go to cash 100% cash? I think I answered that. Yeah, if I'm having a losing streak, quite a bit of losing streak, I want to protect my gains. I can decide to just go on cash. Even if the market's up, I have to see what I'm doing wrong, so I don't lose my gains. I do not place orders right away at 5 minutes, 10 minutes, 15 minutes, 7 minutes. I wait at least 5 minutes. It's after the first 5 minutes, not right at the hop, because a lot of algos, a lot of things are readjusting at the first 5 minutes. Definitely at, I can place orders at 9:35 and onwards. Now, in rare cases, the stock is gapping up, there's a good entry. If I'm exiting, if I can get a good price, something's gone wrong. Sometimes I could sell pre-market to prevent my losses to get bigger. If I can get lucky with that, yeah, absolutely. If I know a stock's going to gap down, I would do that. But I try not to do any aftermarket. And the stock has to be very liquid in order for me to do that. But it's not something I do at all. Okay, any other questions? Oh, looks like it was pretty, wow, this is actually a big event. We had a lot of people. Do you guys enjoy it? And I know this is a complex material, but I had to show the spreadsheet. The trading that was the key to scale in and scale up, because I know I've been getting a lot of messages on Twitter, on a couple of DMs about how do I scale up and scale down. So I wanted to show you in real-time example, and I wanted to use a small account size to show it's possible. You know, you can turn a small trade into your advantage. So that's the point of it. And if you, let's say you buy today and sell tomorrow, for example, you can hit 100 trades easy, you know, even in 2 or 3 days, you know, and it's just managing a risk-reward relationship is at all times. You know, well, at a certain size, then there's liquidity stuff, but your account has to be at professional level at that point. I would say if you're at a really large size, then there's a difference, you know, what stock you're buying. But for the example, I wanted to just show an example that it is possible, and you can do it with a small account. Mark said if he was trading at the USIC at the 20K account, he would be up thousands of % right now, because by using this risk-reward relationship, since he's doing when he's trading at a really large size, he has to look at liquidity, because he does sometimes day trade. I've seen him place an order in 15 minutes. He did a full day trade position using Forex margin and sold it in 15 minutes. But in those 15 minutes, he made 300K. I was like, wow. Like that blew my mind. Like he was able to trade that. He was showing an example how a liquid a trade is. It was really amazing. It was a live trade. I think a lot of MPA members, they all saw it live. It was really fascinating. I mean, he's a true market wizard. And cool. Well, guys, Richard, Bob, thank you guys. Thank you, everyone. I'm going to wrap it up here. I'll have the video soon. Any questions, just, you know, you can publicly message on Twitter, or send me a message on the Meetup page, or you can also hit up Richard. And then Bob is also on Twitter. You can contact them and they can forward the message to me, or I'll see it too. And hopefully, the next presentation will be by Ryan Fleming. We have also Sanjay. He's going to present also in November. Richard, you want to present in October?
Yeah, I can do that.
All right, Richard's going to present in October. So, and then keep a lookout for, since I'm also on the board for the AAII, I'm probably going to have some more growth traders coming up on their platform also, because we're all kind of related. And then stay tuned on Richard. Richard, any surprises on your next video on your channel?
I'm currently talking with Tomas Claro, who was second last year. Yeah, so hopefully get an interview with him coming out soon. Looking forward to that one.
Oh, I'm excited. Have you started that interview?
We've just chatted on the phone so far. We have yet to nail down a date, but
okay. Oh,
yeah.
That's so cool. Oh yeah. I'll hit him up. Oh, okay. Oh, that's gonna be exciting. Yeah, that's exciting, because I want to see some of his trades. He's done some unique trades that I'm trying to like wrap my brain around. It's like, what is he doing on those trades? I want to see.
Yeah, because I think he's a very quick time frame as well.
Yeah, so. He's very quick. My trading style is very similar to Matt Crusoe. Ours trading is very similar. Like, it's unbelievably how we're like very similar in our trades, like, to be surprisingly honest. Like, that's actually pretty cool. I want to see Tomas. Oh, it's gonna be exciting. I'll hit him up privately, ask him what's he doing. But thanks, Richard, for that. That's exciting. Everyone, please stay tuned to his channel for that interview. And then I want to thank everyone. Thank you for attending, taking time off your day. Hope your families, everyone is good. Be safe out there. There'll be a lot of opportunities in the market. Stay focused. Keep the discipline in check. Watch your stops. Study. I highly recommend getting MarketSmith for research. Just saves so much time. If you do well, even on a trade like this, MarketSmith can pay for itself. That's one of my goals when I first started trading. I never paid for MarketSmith because even a small account paid for it. And I'm not using any options. It's strictly stock trading here. And then it's, keep that in mind. So good luck and be safe. Thank you, guys.